Hello everyone, welcome to the TheCapitalNet TV. I am Rakesh, Bhatia, your host for the discussion today. What is the discussion about? It actually is about the same time of the year we all at the startup ecosystem or businesses or economy in general look forward to the budget announcement by our Honorable Finance Minister. The budget will be announced in a couple of days, and there are a lot of expectations that everybody in the country has from this upcoming budget. But at the TheCapitalNet, we look at it from the lens of the startup, private investments, and innovation ecosystem. And to discuss that, today we have three gentlemen who are very deep into the ecosystem, have watched it very closely, act in it very closely, and would have the perspective of all the different stakeholders that are part of the startup, private investments, and innovation ecosystem. Today we have Vijetha Shastry. He is the Executive Director of Bangalore. We also have Murali Bukkapatnam. He is the Global Vice Chair of TiE. We have Mahavir Sharma. Mahavir is the Chairperson for TiE India Angels and is a past President of TiE Global as well. Thank you so much, gentlemen. Thank you for taking time to have this discussion today. I know we all are eagerly looking forward to what the Finance Minister would be presenting in coming few days. And since from the TheCapitalNet perspective, we always analyze things from the viewpoint of the startup, innovation, and investment ecosystem, it's great to have all of you who have been part of this ecosystem for so long, so deep into it, and hear your perspectives of what, from your interactions with the industry, the ecosystem and the stakeholders are expecting. Right. So while we know that there are quite a few sides of the ecosystem, but we'll start probably with the nucleus, right? The core of it remains to be the startups on the ground, right? And I think I'll go to Vijetha for that part, because Vijetha, I believe you interact with the startups on the ground in Bangalore, which happens to be the startup hub of the country, day in and day out. What do you think as a starting point, the startups in the startup hub and in the country across would be expecting from this union budget?
So firstly, thank you so much, Rakesh, for having us together here. And yes, it's a privilege and honor for us to be the voice of the entrepreneurs and startups who are doing so much of innovation. They're bringing so much of value, employment, and solving the country's problems. So yes, what they would love from the budget, Rakesh, and what they would also like to get this much of opportunity for them is a level playing field. At the same time, a little bit of extra love. They do pay their taxes, they do pay their GST on time, and you can't run away these days, right? Everything is online and it's all digital. But can they get it on time? Can they get it a little bit extra, lesser time? So that way, because as we discussed before as well, this is the runway. This is the way that they run their business. This is the way they pay their employees, and they really use this capital and this money to innovate, to do patents, to get these solutions that the country needs to solve the problems. So having said that, how can we help them? How can we create this forum? Can we create more activities and get the voice to the finance minister? And I'm sure that she's, by the way, from Karnataka, right? So she, I'm sure, will think about this, that as the nation needs innovation, it also needs help and support on getting the refunds on time, making sure that, Rakesh, we were talking about patents as well, right? If we want to be the IP and innovation capital of the country, and of course, the country needs this as well, right? There's so much happening in Bangalore and Karnataka, of course, in Rajasthan, of course, in Hyderabad, of course, in Chennai and everywhere else. What can be done? While there are provisions, the Karnataka government has provisions, and we were just talking about the fact that Startup India also has provisions, but it's very, very, very expensive to get a world-class patent, to go to different countries and get these patents. So can we help them? Can something be done so that they get access to capital faster? Can we help them to get these refunds faster? Can we help them to get even better discounts, because lawyers and this IP costs a lot of money? So in some ways that we can give this kind of support to the startups, the founders, and the technology innovators, I think this will make a big difference for the country. Thank you so much, Rakesh.
That, I think, great inputs, Vijetha. But when you say that if the taxes can be faster, what on the ground you see happening in terms of how much time generally it is taking when they're looking for the tax refunds, whether it's GST or income tax?
Yes, so this was just a poll that I did over the last few days, and of course, since we are having this conversation, it takes 4 months, sometimes even 6 months to come in, which is a lot. But think about this, right? Even a vendor now, because we do so much of work with the corporates, etc. Everyone says 60 to 90 days, 120 days is when we will take to pay you. But the GST input has to be paid off by advance, right? You can't delay that. So they're anyway paying. So
Sure.
then they have to wait for 4 months, 6 months. They're not being paid. Their the money doesn't come in from the vendor. The refund of the GST also is not coming. Just think,
So
isn't it a tough time?
does your survey also somewhere covers or talk about what is the average runway a typical starter is living with?
Yes. So this is a tough one, but they usually say that on an average, they're running for 4 to 6 months, Rakesh, and that's on the higher side. Okay, I mean it is a tough one because the expenses are high. You have to pay your taxes, you have to pay your GST, salaries have to be paid on time, and unfortunately, operating expenses are very high. If you're a technology startup or you have to pay your vendors on time, you have to pay for your cloud credits, you got to pay for your lawyers, you got to pay your chartered accountant. So 4 to 6 months is the average that they are running on, and getting these refunds back on time is a big bonus for them. Thank you.
Interesting. So right now, if I'm hearing it right, we're talking about three aspects. One is, or rather two aspects. One is the faster refund of the taxation, whether it's income tax or GST. And the other is the speed of processing for the subsidy on the patenting. Is that right?
Correct.
Okay,
And the
very interesting.
other help, Rakesh, if it's possible, is we talked about this fact, right? I mean, of course, this is not exactly a budget part of it, but a provision to push the payments back to the startups faster, because they're really struggling. If they don't get the payment back on time, who do they go to? Who do they request for help? And the finance ministry is very strong, right? They can actually monitor these things and make sure that the startups and younger entrepreneurs get paid well on time. We're not saying early or in advance, well on time.
So payment from the government agencies, you mean, if they're
Government
serving the government agencies?
Exactly, sir. Government agencies and even all the various SMEs and MSMEs. Because if you see, about 30 to 40% many times for startups, the business comes from government, from
Sure.
various governments, central
Correct.
governments, and even from state governments, government departments. So there's a lot of support
Release
that they
of the
can get.
payments from these agencies, which
Yes,
are largely government, quasi government, semi government,
correct.
if that speed can be made faster. Yeah, I understand that probably is not part of the budget, but it definitely adds a lot of difference to the runways as we are speaking about for these startups.
Yes, sir.
Awesome. Thank you so much. I will come back to you. I think there are a few more points that I've been hearing from other startups around me, and I would like to put some of those questions further back to you. But then, if you look at the other side of this ecosystem, Murali, and I'll come to you for this question. And you again have been looking at things from the global angle, while you have been part of the domestic ecosystem for quite some time. But then if you see the investors as a major stakeholder, right? So are they expecting something? Are there any challenges that they see while being in India versus still being an FDI or a foreign-oriented fund or foreign-based fund? And is the AIF making any changes? Can it be better?
Yeah, I mean, actually, the AF3 fund, right? The category 3 AFs currently does not have the distinct tax framework, Rakesh. So, so if the Ministry of Finance can take a considerable look at it, right? On what this section would mean would be, especially in India right now, in last 2-3 years and next 10 years, right? This this particular alternate method of investing is gaining super popularity, right? And especially in the public markets. And especially, and when it goes into an IPO or a listing kind of a thing, you are subjected to double taxation and also as a business income characterization. So if there is a consistent taxation framework, I think a lot of limited partners, general partners, angel networks would be very happy with the how the investments can be furthered into startup ecosystem. As Vijetha mentioned, now the startups are becoming the backbone of the Indian economy, right? As Honorable Prime Minister Modi also declared a specific startup day, and given the push for the startups in the country right now, if Ministry of Finance can come and say, okay, these are the benefits which we are going to give, and come up with a separate framework, right? And also, say, for example, even from the insurance companies' point of view, I don't think they are permitted to invest in the debt fund of funds, right? Whereas there could be GP in the SIDB kind of a structure, if debt structure can also be improved. I think you have a lot more opportunities for furthering the entrepreneurial ecosystem with the startups are concerned. And also, I think there is a bit of ambiguity from the foreign investments in the either fund of fund or in the AF structure, all that model, right? If that can be carefully worded and a lot of clarity can be given by the regulatory authorities,
sure.
I think that would ease up quite a bit. Then the other interesting thing, Rakesh, is the long-term gains, right? Unfortunately, as angel investors or funds which are investing, they should be not penalized on the capital gains on the exits which they get, because they do need to wait in some cases almost 8 to 10 years for them to get an investment. And on average, it is 7 to 8 years. See, and also, I'm pretty sure my friend Mahavir will talk about it. For every 10 investments you make, maybe two to three go for bust, right? And another 2 to 3 will just give you your principal back. So, and getting taxed on the ones which you really get exit, you're not really looking at the full spectrum in an equanimity, right? And I think if the regulators can have a bit of an equanimous outlook, and if the framework can be brought out in such a manner in the upcoming budget, I think it would be of a tremendous help to further the investments, and which furthers the startup ecosystem, as Vijetha just mentioned a short while ago.
Sure. So that's helpful. So let me relay this question further to Mahavir as well. Mahavir, Murali spoke about the very specific part of the long-term capital gain. I believe the surcharge was increased from 15% to about 37%. Is that what you believe has an impact on the AIFs as a whole when they are making an exit, or what is your perspective on that?
So, it's multiple things. Obviously, this is one of the things. Long-term capital gains, short-term capital gains are also equally important. I mean, it's if you look at the number of investments that are happening in startups in India, and you go across and see where is the money coming from, and you will see that India is a very small contributor in the startup ecosystem as money coming in from Indians themselves or in India-based AIF funds. Most of the big ticket, Series B, C, D, E, F, all the money is coming from Singapore, Mauritius, Cayman, US. Why is that? Because they have a flat capital fees on the carry. They are giving much more conducive environment to advisories and management companies. They are much easier in terms of getting the money in and out for investors. It's just simply not feasible because it's not working. And that's why even many investors don't want to go the SEBI route, get the approvals, Cat 1, Cat 2, Cat 3, whatever the fund is, whatever the size of the fund is. It really is, unless you are a small size fund, you are okay in India because the cost is prohibitive to get non-resident Indians and to get foreign entities to be part of a GP is a complicated process. But quite honestly, most people are going out and creating these funds and investing into India and then taking the carry out and not paying any taxes to India. It really doesn't help. It doesn't really work. And it's not fair to, as a level playing field for people like us who are sitting in India, wanting to invest in India and wanting to reinvest the exits that we are making. It's not, how real estate is. If I sell property, if I buy within a year, I get zero tax on capital gains. Why can't we have something like that in startups? I mean, if I've exited and I have made money, why can't I go from there and reinvest in a startup or create my own fund? How do you think all these funds are created? It's because we've been successful. So certain, a true tribute to the startup day would be by coming up with totally innovative tax exemptions and policies long term, 3 to 5 years. I mean, there's issue on booking losses if the co-founders have changed. There's a 7-year window, but you and I know that co-founders seldom have majority stake as we go along, and when there is time to book. So if it's a legit SEBI registered fund, if it's a legit network investing into a startup, and if it's not someone who's trying to buy a loss-making company and round off his profit in another corporate, it should be allowed. I mean, I don't see why. Is if a startup income is written off by a startup loss, it's absolutely fine, no matter who so these are little things which is fine print, but which is very critical, because when we experience all this, we go into the details and we end up paying a lot of tax, a lot of hassles, that as Vijetha and Murali have said. It's a very, very critical thing. Small things become major things, and ease of doing business, which the government's mantra has always been there, does not exist for startup, does not exist for angel investors. It is people who come from outside are monopolizing this. That's what I think.
Sure. No, I think this is an important one. It has been a burning issue for a while, the particular one around the carry forward of the losses you're talking about, right? While I can imagine the intent would have been to set the accountability on the founders and the promoters, but the very inherent part of the startup growth is the dilution, right? As they raise money, it's unavoidable, and the structure and the holding remaining same for them is almost close to impossible, right? So, and I do understand that there's an impact on this, and despite the regulation being sitting there, it's not much useful for the founders and the startups. If you have to make, on this particular point, if you have to make one recommendation, what would that be?
As I said, my recommendation would be to make a flat 10% capital gains tax on all investments in startups. You have a defined policy. You have a registered platform where startups get this thing. Why have too much of tax? Let everyone, make, if I go to UAE, Middle East, if I go to Mauritius, I pay 10% or 15% at the most. Why should I pay 30% on the carry? Why should I pay a surcharge on capital gains? Why should I be taxed twice? Once when the startup is exiting and everyone is taxed, and then on carry, when the carry is coming out of the dividend that the company is making. So it's very complicated, and we are being taxed again and again. I would simplify taxation for startups and angel investing. Simple.
Very good. Thank you so much for that. As I said, I have a couple of questions that I've been hearing from the founders that I get a chance to interact with. And one of the things which I believe I will probably throw back to Murali, because as an entrepreneur, I believe that you have a lot of work that you have done and are doing around the staffing and staff augmentation side of it, right? And there have been certain changes in the recent wages bill, the past wages bill, which sets the basic salary as X percentage. If I'm not wrong, it's about 50%.
50%.
But do you see that as an impact? Because people say that it kind of shortens my runway as well, because employees are still
absolutely right, Rakesh. I mean, if you're a startup, right? I mean, if you go back to the initial thing what Vijetha was saying, your runway is about 4 to 6 months, and sometimes your runway you stretch to 9 months, right? And in that particular with that kind of frame of work in which you're working with, a frame of mind you're working with, when you say your basic salary itself is 50%, and on the other hand, it becomes such an arduous task to go to any financial institution if you are a startup to get any kind of a loan, right? Because you as a startup, you don't have the ITRs of last 3 years or 5 years. You don't have the assets for which you can pledge like a typical old business models, right? In that circumstances, right? If especially let us say if I'm managing a blue collar workforce, a facility management company or a hospitality company, right? Where the people are, the resources are high in number, right? And for that, if I have to make a basic salary 50% of my salary as basic salary, it is so much pressure on the founding team to make sure that they meet their ends at the end of every month. And that is an unnecessary pressure instead of doing a business development, instead of doing certain product innovation, instead of doing certain service innovation in which they can satisfy the customers, create a value to all the stakeholders involved, create more employment. You are now trying to become you're trying to become the defense player, right? We are going back to the old style of test cricket, where we used to play for 3 or 4 days, maybe in one inning. This is the era of people like KL Rahul, Rohit Sharma, and Virat Kohli, where you got to play maybe in 4 days. You have to finish the entire 5-day test match, right?
So, but just to bring a little clarity on this to the audience here, right? So, if the basic salary is fixed at 50%, what impact does it usually bring to the employee, and how does that translate to the founders of the startup itself?
See, my entire CTC, right? The take-home salary which I would give to the my employee automatically increases, right? The entire tax structure which I have to pay to the professional taxes or whatever I need to pay to the government, that increases. So which means, see, as it is, Rakesh, you know that employee cost is a sunk cost, right? I mean, if you look at two buckets where I am putting one cost into the productive cost structure, the other one is a sunk cost, right? Your rent, your salaries, your office management are all, once you put it in that bucket, it's gone. There's no ROI on that money. Now you're adding that extra burden onto that zero ROI bucket, instead of giving the incentives onto the other bucket, the productivity bucket. So as Mahavir said, if Ministry of Finance can come up with a framework in which we incentivize this bucket. Let's say, okay, fine. Let's say, take an argument, hypothetically, you keep that as a 50%, but make it absolutely easy for me to get a cash flow loan from the banks if I have the DIPP startup certificate, right? DIPP has given the startup certificate, great. But what does that certificate mean? If I can create a value to that certificate, right? It is the department which has given the certificate. Now, can the Ministry of Finance recognize that and say, okay, any startup which has a certificate, they don't need to show this 3-year ITRs and everything. I will give a 6-month cash flows as a debt structure with minimum interest rate, 6% or 8%, whatever. So let the founders borrow. So then the founders are okay to take this on their burden. But without this and that, they're having their they're like chicken cut off their heads, right?
So is it not something that typical revenue-based finance model works on? So what you are suggesting is that the nationalized banks to a startup who holds a DPIIT startup certificate should be giving those kind of revenue-based financing as well? Is that what you're...
So see, first of all, in India, the factor-based financing is so difficult, right? It is almost impossible unless you have maybe 6, 7, 8 years of banking relationship with the bank. And it is all depend. It is a very subjective this thing. It is not like other economies, right? I mean, as Mahavir mentioned, it's not like UAE, Europe, or US, where it is not subjective. It is a checklist, right? 1, 2, 3, and you're done. If that kind of a framework is come, see, it is other form of investments which are coming into the startups, right? It is a debt. They don't need to dilute their equity. They don't need to go with a begging bowl to an investor, say, and in a desperate situation, guys, we only have 6 months of runway. Please give me some money, right? Then they'll lose out. That is not the case should be. There should be, the entire ecosystem should act together and say how to nurture that startup and take it further.
Sure. So Vijetha, do you resonate with any of those thoughts as well? between the wages and the financing, though they are disconnected subjects, I understand, but they are still, both of them are very important for the founders.
Yes, yes. Thank you so much, Rakesh. And definitely Murali and Mahavir were very articulate and very passionate about their point of views, which makes a lot of sense. Let's think about this. Let's use the word employment and jobs. Okay. Isn't it important for the country? Is it not important for the ecosystem? That's number one. Number two is, see, we are all part of the Thai ecosystem, and we interact with so many embassies with other countries as well. Part of the soft landing that they all very, very aggressively promote is that if you hire more people, you will get tax rebates. If you hire more people, you will get softer loans. If you hire more people, we'll be nicer to you. Okay, so let's try to understand that. So when we're talking about employment, we're talking about tax, we're talking about building the economies and everything that we want to do in our country. Can that also be helping? Like if I'm a startup, say of 1 year, 3 years, I've got technology innovation, I've got patents, I've got IP, and I'm creating a lot of employment. Can something be done to help me out better?
Sure.
Right? I think that would be one thread that we would definitely look at. And
Sure.
it's not that I'm from Bangalore or Karnataka and it's about technology.
Sure.
Mahavir, I know, is very passionate about the travel business, events, exhibitions, hotels, airlines, co-working, co-living. Now, these industries actually employ 15 to 20% of India. So maybe from that point of view, they've been crying, right? That how do we pay our rentals? How do we pay our salaries? How do we get working loans from the banks because we don't have cash flows and we are forced to be on lockdown? So maybe some of these kind of things that can help, even if it's short term, Rakesh. I think Murali and Mahavir would agree with me that that would really help the various economies of the states and everything. And yes, and startups are the innovators. Yes, there are SEZs, there is infrastructure, there are so many other big industries which are big employment, but the future is
Sure.
going to be about how much employment, how much tax, etc., that the startups, innovators, and entrepreneurs in these new industries will pay. And why should they go to Singapore or Dubai or anything? They should be in our country.
Sure.
Isn't that's what I think? That's what I want to say, because that's what makes a difference. And how do we manage to convince the various ministries is what really matters out here. Thank you for that, Rakesh.
Sure.
Okay, I just have a follow-on point from Vijetha. Say, for example, if you look at Airbnb, right, in US, Airbnb would have created at least 10 or 15 other startups to help the Airbnb business, right? Why? Because of the conducive environment in which, as Vijetha was saying, that whether the short-term loans or some mechanisms in which that entire ecosystem comes together to help the entrepreneurs and the number of jobs that created. So India being the largest country from a population point of view, we should play our cards well from a demographic dividend point of view. And demographic dividend is in the hospitality, the tourism sector, which has been badly affected last couple of years, right? So if a government policy in the budget point of view, even for the investors who would like to look at these industries to invest in, if certain incentives to be given, imagine the possibilities that opens out for the number of jobs to be created. And I mean, I'm talking about literally tens of thousands of jobs that gets created.
Sure. So, Mahavir, interestingly, Murali brought up the point of demographics, right? And I probably would like to jump to a very different demography of the country. We all know there's no dearth of the liquidity in the country as well right now. Why do you think that the old economy, industrial family houses or family offices, they have been shying away from private equity as an asset class? And what can the government or the upcoming budgets probably can do to encourage them to take a plunge there?
I think incentive on taxations. See, the one good thing or bad thing about technology is that everything is very transparent. Unlike a traditional business, let's say textiles, there's so much of fudging and so much stuff that can happen that you and I know. Whereas in technology, when something is being sold online, when payments are coming in digitally, when everything is tracked and recorded, the government gets so much of indirect taxes. Government gets so much of, there's nothing that you can hide. I mean, these sectors should be encouraged. That's one. Patent, for example, and just to add to what Murali and Vijetha said, There are countries that if you have a global patent in your name and you're about to file that, they pay for the entire patent filing. I mean, Ireland is inviting India-based startups. Canada is inviting. Sweden is inviting. Everyone has a sector space. Sweden wants biomedics. Ireland. What I'm trying to say is when Indian startups, when angel investors are going out, when startups with deep tech or patented technology will be going out because they'll get incentives, they'll get money, they'll get market access, etc., etc. India needs to do something very, very quickly. And quite honestly, I was hoping that these IPOs that have just come in will ensure that the traditional businesses would now start to invest in startups and see the return on investments for people who've started to invest at a very early stage or a growth stage, Series A, Series B. And there is mathematics and logic behind that stage investment rather than a very early stage. I was hoping, but the tech stocks have plummeted. The return on investments is not as high. But I think in the long run, you will see that traditional businesses will come to the rescue of India. I mean, I was talking to a property company. They're into real estate. They're into construction. They're doing commercial, residential. They're now promoting prop tech, from robotics to management. So there's prop tech, which has totally new tools on IoT devices. So people are innovating. People do realize that technology will enable their properties. NFTs on sale of land and property will shortly come. It's not just going to be art. So everyone does realize that the mega business or big money or HNIs of India, which are technology savvy, will become more stronger and enabled and become more democratized with technology, whether it's blockchain, whether it's other IoT devices, etc., etc. And I think India should be the hub of innovation. Government should definitely do a scan through all the patents that Indian government has granted for India to see which patents qualify for a global patent funding. And that funding should be done immediately before other countries come into something that's very, very important for the growth. I've always been asked this question: why does India not innovate? Why is India always the back office? Well, we don't do that because we don't have the support. We don't have the kind of funding and valuations that we get in the US. We don't get the kind of support that we need, or the money that we need to have to fight legal battles in China's of the world to see why our things are being copied. While all that is needed, because India cannot be compared to developed countries. India is very nascent, still number 3 in the startup ecosystem. We really need to handhold and strengthen our innovative leg, which is the startups. And that's what I think I'm looking forward to see in the budget.
I have an interesting question here. I don't think it fits into the budget conversation at all, but I probably will give it a half a minute or a minute to you particularly, since you look at it as an investor as well. And when you talk about the patents and the IP, we talk about innovation, we talk about patent a lot. I think all investors love to talk about it. But then is Indian investment ecosystem giving the IP its true due? Because I don't see that kind of importance given to the IP when they're valuing the company in India versus the Western geographies.
See, valuations per se across the board in India is lower than when you compare to US. I mean, you who would know better that the same thing that you're doing in India is valued 1/10 of what it would be valued in the US, because the market is different. The market dynamics and the paying per capita of a consumer for a B2C startup or D2C startup and B2B, it's much larger. So the revenue is much larger. And obviously, if the revenue is more, the valuation is more. Now, these IP or these patents, from no matter what field they are in, if they are handheld and patented across the world, and world becomes a market, obviously the revenues will be higher and they'll get invested. Whether Indians invest in Indian patents or global companies come and invest, but at least we'll be protected. And that's what is key. And this nurturing is needed at this initial stage. Otherwise, we would never be able to have innovation coming through our country.
Sure, interesting thought. I said I will not probably stretch this one. Considering that it's a
revenues are different. I mean, for someone that India would charge 10 rupees because the size of the market, they would charge $1 in the US at a minimum, and that's already 7 to 8 times. So imagine the kind of revenues that one can generate in India with the same idea, same technology, same team, then it would be in India. So it's just, and in the 1 year growth or 2 year growth will be different because technology adaptation is far better in the US than it is here. So the valuations have to be different.
Sure, understood. Vijetha, back to you. One of the things that I have been again very importantly hearing, and I think even as a founder, I also feel that part is how the ESOPs are taxed, right? So most of the founders, for them, ESOP remains to be an important piece of incentive to attract the right talent and hold them through the journey of the startup till the time it becomes larger. Not everybody is becoming a unicorn every day, right? So how's the taxation on the ESOPs impacting that talent retention, talent attraction for the startups that you get to interact with?
Yeah, thank you so much, Rakesh. So I will take this up in two aspects of it. One is, of course, the fact that it's a very critical retention tool, especially when you see the developer salaries going through the roof. Not bad for them. Let them earn their money. Let them earn as much money as they can. And also the trend is that what will they do with the money after they encash the ESOPs? So if I keep scanning LinkedIn all the time, and there are so many people who said, by good karma, I've made some money on my ESOPs. I made my money because of merger, acquisition, getting acquired, or my company got taken over, and now I made some money. Now I want to invest back in startups. So when they say currency, right? Currency is current. It's a circular thing. It's actually coming back into the community. It's coming back to the ecosystem. They want to invest. I was having this very interesting conversation with some people that what is happening in the US, that many Indians who are making very good money and they've made so much of savings, they want to come back and give that money to India. They want to invest in their alumni networks. They want to invest in their friends who are done startups or doing startups.
Sure.
So this is so much of attachment to the ESOPs and the money. And yes, we did discuss about this, that the taxation rate is very, very high. And I will give this thread to what Mahavir also is saying, right? When you sell a property, if you manage to invest back into another property within a certain framework of time, you save a lot of tax.
Sure. Yeah, but the other issue that I hear with the ESOP taxation, Vijetha, is the timing of the taxation, right?
Yes.
What I understand,
the gestation period
right now is when the vesting happens. It's not either at the time of exercise or the sale, right? It's at the time of vesting, which I do not know how it adds value to that retention part that we're talking about.
So it adds value to the coffers of the Indian government. They get their money in first. Okay, but yes, you're absolutely right. We have to be able to convince the powers to be and the powers who actually take these decisions that in the long term and even in the medium term, I should not say long term, by making it less taxable, this is not just the point, but also the period of time. Like, because it takes time, as you said, for gestation, they get the money into their account for a lot of period of time, but they're paying the tax in advance. The more they give incentives on that, this money will actually come back into the economy. They will buy products. They will invest in the second or third house. They will invest in startups. They'll invest in the stock market. And then suddenly our economy goes up. The per capita goes up. But then how can we create a very compelling case? I think that's where we can all come together and exercise our options in a way, and also bring in people who can make the definition of why this is worth changing. Yes.
Sure. Murali, I saw you nodding when I brought that point up of the timing of the taxation.
No. Yeah. So last budget, right? Or I mean, few months ago, there was some relaxation given to the entire ESOPs exercising, Rakesh, and that's hence I was nodding, and I was nodding in concurrence with Vijetha's statement that it is the largest tool, right? Any startup founder has at his or her disposal to attract the best of the best talent, not from within India, but from the globe, right? If you, I mean, as Mahavir mentioned, India has to be the innovation hub for the globe. If that has to happen, the global talent has to come into India, right? If the global talent has to come, we can, right now, no founder can afford to pay that kind of salaries which the global talent. So what is the tool which they have at their disposal is the ESOPs, right? But when they are trying to give that ESOPs out, there is a bit of a relaxation which was given, but see, again, there is a conditions which they have put, right? They have put a 48 months condition. They have put a condition of 25 crores of revenue at the upper limit, and beyond that, again, it will be taxed like that. So there are conditions which the Ministry of Finance put. If Ministry of Finance can remove those things, right? because as you know, Hyderabad has been a bit of activity with respect to unicorns and startup fundings lately. Rakesh, you are aware of it. So when you automatically propel into beyond 25 crore thing, you still, as a founder, you need to attract the talent to be the unicorns or decacorns of the future, right? Now, how do you retain that kind of talent, right? So the government has to say, if you are a startup, you are under the what DIPP considers you as a startup, and you are bringing that innovation to the ecosystem. You're creating those jobs. As Vijetha mentioned, a very, very important point. Every country in the world looks at a company from the number of employment that that particular company is creating. If I can create directly or indirectly that many jobs through my entrepreneurial journey, I should be rewarded for that. I should be, taken care. I should be protected, right? And if those things can be done by further relaxing this entire ESOP stock option plans, I think would be a fantastic opportunity to really take the startup journey to the next level.
Sure. I think, Mahavir, I would like to bring this to you as well, because I think this is a very important question. The global practices have been different again on this, right? And vesting, whatever schedule it is, right? It is now, or whether you get taxed at the sale. It again connects not just with realizing the money when company becomes a unicorn. Not everybody becomes a unicorn, but even if they do, there's a journey that they have to cover to get to that point, and that journey again has that runway as an important factor at every milestone in between, right? And that taxation at an early stage of the life cycle of an ESOP, which is vesting. What is your thought about it? Is that real? Is that what West follows? What are the global equivalents?
See, I mean, I'll tell you, and taking from where both of them have left it, what would a company do if they want a foreign talent? You know what they would do? They would create a mirror company outside of India. They would give that person a co-founder position and give him or her equity. And what will happen is India company will never have the valuation or the funding or the revenues that it's supposed to get. It will continue to be here, double taxation. The taxes will be paid in the country that they are now registered and operating in, and India will just get income as a holding company, and that is what it is. I have a problem with all of this that happens. When brain drain happened in the 70s and 80s, and after higher education, after we provided them free education, people went out. There was a big halla. Right now, from startup to angels to early stage to growth stage to patented to everyone is going out. Why can't the government look and see why? Why is India not the right place? Where is it? Is it handholding? Is it taxation? Is it environment? Is it runway? Is it support? Is it funding? Where are we wrong? Why can't we plug these gaps, and then you will see true economy and true India growing up, and not people wanting to go out. And people who go out are normally poised for growth, and that's why they're going out. And we have to stop that. We should have India holding companies operating across the globe. We should not have India as a market in itself. There should be companies who should be, it should not be Facebooks and Googles coming and all the income being generated or being taken out of India. We should do it the other way around. We should have the income coming back from the US to an India holding company, because we have a subsidiary in US, not a subsidiary in India, because India was not conducive enough. That's my basic core problem. That's where we need to plug every level. We need to plug not people going out, but people coming to India.
I think great point. I love that passion of the money flowing in India and Indian money staying in India to further enhance the ecosystem. That's what I hear from Vijetha. That's what I hear from Murali. That's what I hear from you. I think very important points. I'll be very curious to see what our Honorable Finance Minister comes out with when they announce the budget, and how many of these points actually get covered into that. Very, very curious to see that. I would love to have a follow-up conversation with you all sometime, maybe over a cup of coffee.
Yes. Rakesh, one last point.
Yes.
Vijetha stake claim for Finance Minister. I also want to stake claim, because she's a Telugu person. I mean, actually, I think that both Tamil Nadu, I mean, all the three states, Tamil Nadu, Karnataka, Andhra Pradesh will stake claim that she's our girl, our Andhra Adapaduchu. So there I stake my claim.
You can claim whatever, but I'm hoping that this video will reach to them. That's the only thing.
Let's hope that. I also probably would not stay behind and say that as an Indian, I also take a claim of our Union Finance Minister being a Indian lady. So, but again, yeah, no. So I think great conversation. I probably would go around one by one and like to have that one key point that you would like to leave that could or should be addressed in the budget. Mahavir, let's start with you.
What should be addressed? I think that if you can simplify taxation for startups, for investors, make it a flat thing, give incentive to people who deserve it, who are creating employment. And I rightly said earlier, I think that would be my one thing to get.
Excellent. Vijetha.
Resonate with Mahavir, because it's not just about making it simple for the sake of the money or the thing, the ease of compliance, also the time. So many times, we put together so many get-togethers, round tables, and events at the TIE. All of us do that. And suddenly, whenever I'm talking to these startups, I find out, I'm spending time with my CA. I'm sitting with my legal. I have to file some returns. So by making it simple, their time, which they save to use their brains for innovation and IP, patents, expansion, creating jobs, I think that's what I would like to say, sir. Just save them the time, because they need that. They really need that.
Awesome. Murali.
Yeah, I couldn't agree more with both Vijetha and Mahavir. If investor can be treated as a god, right? If one thing I would want to expect is the investor in the startups to be treated god and given god-like status.
And would you like to elaborate a little bit on that? Because I don't know how you can really put in line with the Constitution of India. So
no, I mean, no. So God-like status means make his life a lot easier, right? Don't treat him as a criminal. Don't tax him at 35%. Don't do double taxation. Both when he's taking the money out. Don't consider him. Penalize him with the short-term capital gains. Give a structure to AIF funds. Make it easier for people to get in and get out, right? Awesome. If I'm investing in a DIPP certified startup, I should, hey, yeah, here is our incentive. This money is yours. Take it.
Yeah. No, that's the answer I was actually looking for. So thank you so much for bringing that up. Gentlemen, I really appreciate your time for coming together for the discussion today. We will try our best that this conversation does reach out to the ministry. Obviously, we at the TheCapitalNet try to be the voice of the startup ecosystem per se, and I believe that we are heard as well. So let's hope we are heard. I know that a lot of action would have already been done when it comes to drafting and announcing the budget, but these conversations are not new. These have been in the circles for a while, right? Our discussion today just reinforces those points, and hope they are heard as well. With that, really appreciate your time again. Thank you so much. I hope that we get to converse again and see what has been the impact of the budget as it comes out, and maybe have a follow-up conversation on this later.
Sure.
Thank you, Rakesh.
Thank you. Bye-bye.